If you're thinking about buying a home in the Killeen Fort Hood area and you want the very best interest rate possible, you're going to want to stick around for this video because I'm interviewing mortgage professional Clarissa Hennig, and her company is offering almost a whole percentage off of the available market interest rate. So any interest rate that you're going to get pretty much anywhere else, she's going to beat it by about 1%, depending on like all of these factors, of course. But the main thing is it's not going to cost you any extra money. So forget 2-1 buy downs, forget all that crap. This is easy. This is clean. This doesn't cost you any extra money. And she can do it in all 50 states. So even if you are not here in the area, or you're leaving the area, or you have friends and family that are out of the area, this can still benefit them. Let's jump into it.
We are offering a program for government loans, FHA and VA, where we are buying down permanent buy downs for the customer. We are buying down the rate substantially with our FHA and VA programs.
Okay, we're here with Clarissa Hennig with First Community Mortgage. And I really wanted to bring you in because you have an amazing program. And like the whole preface of this video is just helping people beat the high interest rates, because that's what's kind of holding people back right now. People are on the fence about buying, waiting for the market to crash, all those good things. So I wanted to bring in like an actual mortgage professional and somebody who has a really, really good program, because I think what's happening now is people are getting creative with how to beat the interest rates. And that's something we didn't have when this whole thing first started. So I wanted to get into who you are and your program, a little bit about you and your company. So Clarissa, you could take it away.
For sure. Yes. It's been crazy. You know, the 2 years, 3 years really of just it being a seller's market, now transitioning into, you know, right now I feel like, especially with buyers, are able to take advantage of some of these seller concessions. So we're seeing a shift for sure. But about me, I've been with our company because we are First Community Mortgage, but we're part of First National Bank Texas. I've been with our company since 2011. I moved over to mortgage in 2014. And ever since then, we've just been rocking and rolling. So there's been ups and downs in the mortgage industry since then, in the real estate industry. But right now we're trying to find ways, how can we help in, especially with these buyers, they're seeing these rates, not just rates, prices for the homes, the taxes, everything accumulating to making these payments seem sort of out of reach for these customers. So we are trying to, mitigate that somehow. One of the pros about being a part of a bank is when times get tough, especially right now, they're able to step in. We are offering a program for government loans, FHA and VA, where we are buying down permanent buy downs for the customers. I gotta admit, I'm not a fan of the 2-1 buy down, just because, if you're not comfortable with that, when your payment is going to get to that 2-year mark, if you're not comfortable with that, then you're essentially gambling because you aren't comfortable now. What makes you think you're going to be in 2 years? It's kind of just, you're hoping that you're going to refi. Well, who knows what we're going to be doing in 2 years? So I'm not a fan of the 2-1 buy down, but we are buying down the rate substantially with our FHA and VA programs. There are some parameters to that. We need at least a 640 and then certain DTI requirements depending on the credit score. But I will tell you, a lot of people that we have had on the verge of qualifying for it, we're making it happen in the sense of maybe paying down credit cards. Just we're making it to where they fit in that, because we have to take advantage of it. We have to take advantage of that buy down to where we can get these payments comfortable for the customers.
Yeah, you said a lot, and I want to unpack a little bit of it. First, kind of for the person who's first time home buyer doesn't know what a DTI is,
yes,
or even what you meant when you said 640. Can you kind of go into depth about those two things?
640 credit score is our minimum on that. If I've had some people that are at 630, they're at 620, and I run one of our programs. Sometimes I don't even need to do that. I just tell them, hey, pay down on this. It's going to shoot you up to 650. and then we're good to go on that. As far as DTI, I mean, debt to income ratio. So we have certain parameters. If you have a 650, you have to have a certain DTI. I'm not going to go debt to income ratio. I'm not going to go into like all the parameters, but we try to make it to where we can get anyone that we can with FHA and VA to qualify for this program. It's
Nice.
been working. Honestly, I haven't had really any that haven't. We have made it happen. So that is one thing that, like I said, we have just been trying to focus on, is getting these payments as low as we can.
Nice. So the whole focus is to help people get the payments as low as possible.
Permanently.
Man, I had a couple things I wanted to ask here. One, okay, I'm not a fan of the 2-1 buy down either. I think it's horrible. I think it's gambling. I think that's
Yep,
how we end up in a 2008 situation,
exactly.
because you're betting on what the market will be like. And I think one thing that we've learned over the past 2 or 3 years is we don't know. We just don't know.
Exactly.
Things are different. So your bank is essentially, are they losing money on the
They're
loan,
retaining.
or?
So the way that they're retaining these loans, so they're making money off of, the interest essentially. So that's why they're able to do that, is because they're retaining the loans. So that's one of a huge pro that we're able to do. And I was actually on maternity leave when that came out. I think I told you it was like in November, December, and I was like, what? I was going crazy, because I was like, this is going to be huge for our clients.
Yeah, yeah. And me and you have already done a couple of these so far. And I wanted to make sure that like it works for my people, because like we can talk about these things all day, every day.
For sure.
But I wanted to make sure that like people are actually happy with the product. And we've actually done this so far with a couple people
For
who
sure.
are friends of the channel, just FYI.
Okay.
So this is, I think, good exposure for you. And what I want is for anybody, no
Mhm.
matter whether you're using my company or somebody else to help you find your house, is to be able to buy a house in the Killeen
Yes.
area. So, and we're big on just like Killeen, Fort Hood, real estate, Harker Heights, Copperas, Cove, all of that. Is
Yep.
this a statewide program?
Yes. So we're doing that. We do a lot of loans in air. We're a 50 state lender. So we do
Okay.
loans in all states, because we're a part of the bank, another bank pro for being a part of a bank. And so we do a lot of Arizona. We have a loan officer in Arizona. So yes, anywhere it would,
Anywhere, all
and
50 states. So if you're watching this, usually we have people that are coming to Killeen, basically. They're
right.
coming in, PCSing in, and a few people that are already here. So if you're watching this and you may be coming in, or you're already here, you've already bought, you're locked in, but you have a friend who's thinking about buying a house somewhere, some other part of the country, then First Community Mortgage is going to offer this same deal. And also give me a quick like rule of thumb of how this is working. So if the average rate is a 6.5 and
Yes.
I have a 700 credit score, typically, and not holding your feet to the fire, but typically what is the differential of the rate that you can give versus the rate that they would get on the open market?
Right. So just for right now, I mean, people that we've been locking in lately, it's been low to mid fives, not costing, or potentially, that gives them, not only do we waive that cost to buy down, but then they can buy down even further to get them. I even have someone potentially looking at the high fours right now, and it's
Nice.
not costing them as much to get there, but they want to get their payment, as low as they can, and take advantage of seller concessions, all that.
So would you say about a point?
So I would say, if you're looking at, for sure, a point for the regular market, I would say close to a point. Yeah, if you're looking, yeah. I didn't want to
So
go into too much
no, we
detail
don't
on
have to go
that
too
part.
deep into the weeds. I think what I'm
Yeah,
trying to give somebody
like an
is
idea.
a
Yeah.
rough idea of what they can expect.
Yes,
So right now, First Community Mortgage can beat the average lender with their average mortgage rate
for sure.
about a point from the average mortgage rate that's out right now.
Average.
Requirements are
Mhm.
640 credit score and a DTI. Where did you say the DTI needs to be?
There's different parameters, so
Oh,
it's hard if I go. There's like 3 or 4 different parameters, but that involves, sometimes we're like, hey, we need to pay this something that's small, like installment
Got it.
loan, or something we just pay off to get them to where, like I said, we're going to make it work. We're going to
Yeah.
figure out a way.
Okay.
The
Good
other
rule
thing,
of thumb. Good rule of thumb for somebody who's like looking to have a healthy DTI. So if we're gonna be buying a house, what's a healthy DTI for my 640 credit score?
640, we need it to be under 55.
Under 55%.
Under
That's
55.
awesome. I would have thought so. I've been hearing 45%.
Yeah.
So that's
So
actually super helpful.
yeah. So that's kind of where we're at on that. So we're saying 640. Let me go, because like I said, there's a whole breakdown. So we would have our different parameters for 45, 50, and 55. But that also makes a difference too, because sometimes with VA, we have people at like, high, and sometimes getting qualified in the 65, 66, 67, but so they wouldn't necessarily be able to qualify for that lower buy down. So we would look at something different if
Right.
that's the case. So I'm not saying you don't qualify. We can get someone qualified at sometimes 585.
Nice.
I'm talking about, as far as taking advantage of this.
Of this particular program. Yeah. Okay. So that's great. Where can people reach out to you if they want to talk a little bit more in depth about possibly qualifying?
So right now, you can just Google my name, really, I guess would be the way to find contact information.
And I'll
And
drop your email too.
yeah, and
the
it
comment.
has that link. Our link is kind of where I'm getting, but yeah, and then 254-630-5053 is my cell. And really, that's how everyone's reaching me right now. And the last thing I'd want to mention is on new builds. I know a lot of people are offering credits for title policies. If the builder is paying the title policy, then we're still giving that credit. So people are using that to help buy down as well on their rate. So just because the builder's paying it, we're still giving that credit.
So title policy, that's going to be basically the insurance that makes sure nobody else has a claim to that house from the day you buy it back. And builders are paying for that. And typically that can be about 1% of that price of the house, somewhere that, or like, let's say 0.5%. Yeah. And so let's say, that could be $1,500 to $2,000. And what you're saying is if the builder pays that for you, your company is essentially still offering that credit to help them either further buy down their rate or just take away from the amount of money they may have to bring to closing.
Exactly.
Awesome.
Exactly. So those are the two main things I wanted to kind of, hit on it. As much as we can try to show people. I mean, there was a contract. Sellers, like I said, this is a buyer's market right now because sellers are paying literally $22,000. I just saw on one.
Wow.
$22,000.
Wow.
So, I mean, that's a lot of money to be used to buy down, to pay all your closing costs.
Man. So. Yeah. So, all right, before we hop out of here, can you give one simple mortgage qualifying hack or tip or something that people don't know, maybe a problem that you see often or something that surprises people?
I would just say the main thing when we're talking credit, credit is not that complicated. Keeping a small, because a lot of people are getting these credit cards, it's $300 limit. And they're like, oh, well, I only have a $250 balance on it. That makes a huge difference, especially if you don't have much credit. So just by paying that down to $20, $30 is going to shoot some people up to a point where I'm closing. I already closed. They closed last week, but he went from like a 601, didn't qualify for the program, and it went all the way to 660. And all he did was pay down like a couple $100 on a credit card. So just be sure if you have those small credit limits on your credit cards to keep the balances as low as you can.
Right. So keeping the balance low on a small limit credit card is going to help you way more as far as like your actual credit score than you usually than you usually think it would.
The credit card utilization ratio is huge to your credit, huge. And it's an easy fix. So I mean, it's one thing that we can do a quick, like I said, like I did on that customer, did a quick rapid rescore and get it updated, but super important just with qualifying.
Nice. Anything else you want the people to know before you get out of here?
I think that is it. I think I've covered everything. I'm just excited. I feel like it's heating up, and that's what makes me nervous. As far as for the buyers, the first time home buyers, I want them to know that right now is their time,
Yep.
because in the summer it heats up. And if it becomes more of a seller's market, we're going to see what we saw for those years where buyers weren't able to compete. And
Yep.
so first time home buyers, you know,
Yeah.
to those cash offers, to those 20% conventional offers. So I just want people, you know, those first time home buyers to know that this is your time, really. Honestly.
Yep, it's creeping back in too, slowly but surely. I've had more than one multiple offer situation in this past 3 months. And then over the past 2 months, the active inventory on the market has dropped almost 25%.
Exactly.
I mean, 20%. So it was really high. Like we had way too many houses. So it's kind of coming back down to a place that makes sense. But I'm like also side eyeing, like, oh no, I don't want us to end up back in that place where, you know, houses just aren't affordable anymore. So
exactly,
we'll keep our eyes on things, and programs like the programs that you guys have, like it's super helpful. And it's really helpful for the first time buyer, especially first time VA buyers. Like the rates that you're offering right now are the same rates I was seeing in 2016,
right?
In 2017. Right. So this is where a lot of my clients who we sold them over the past year or so, this is where they got in. So it's not as bad as it may seem. So there's some hope out there. I think that's what I really wanted to get across with this video, is like, there are ways that you can beat the high interest, that you don't have to pay a whole bunch of money out of pocket. And if you wish that you would have bought in those years, like this is kind of putting you back in that place.
Exactly. We're having people get their earnest VA. They're getting their earnest money back. I mean, we used to not see that forever.
That hasn't happened in years. So yeah, that's awesome. That's awesome. All right, Clarissa, thank you for giving us a little bit of your time. I'm going to make sure I drop your email down in the description. And yeah, I'll see you on the next one, because I'm probably going to send somebody else your way in order to get them ready.
I appreciate it. Thank you, Stefan.
All right, bye.
Bye.